Hi, we're at the Metals Investor Forum, and I'm standing here with Stephen Dean of Atlantic Gold, who's probably going to make fun of me a little bit because I bought Atlantic in the Maven portfolio. It was some time ago now, last fall.
Yeah.
After visiting the project, this is a project in Nova Scotia. They're building a mine. I think it's a really well-managed asset from a risk perspective and from the geology and the team. I did sell a little bit of my position and recommend selling a little bit of my position just the other week because the stock had done very well. But of course, Stephen thinks I'm very wrong on that front. What's your main reason for thinking that?
Well, I don't think you can be wrong. I think what you wrote about was the summer doldrums, which I agree with is often the case
in the gold
sector. In our sector. I think the differentiator may well be for us is that we're one of the only companies in the gold space who are putting a development property into production over the summer. Mm-hmm. And as you, I think, would agree, most companies tend to re-rate when you go from that development stage to a cash flow situation.
And that's actually a part of the cycle that I think is under-recognized. People love the exploration ramp up. Mm-hmm. But the build really works, right? And so Atlantic's share price has shown that already. But yeah, you're going into production now. You're on track to pour your first gold in about 4 months.
Yeah, in September. We're on budget and on schedule, I'm pleased to say. COO Maurice Bellinger is doing a wonderful job of making sure that's the case. And as you know, we've also got that fixed price contract, which helps, of course, to minimize that schedule and that budget risk.
Right. And this mine that they're building has very solid numbers behind it, based on the feasibility study that it was built on. So the what's the return expected to be? Like, outline the numbers of the mine that you're building before we get into what it might become.
Yeah. And by way of quick explanation, it's what we call our base case production profile. And that was a function of the fact that we financed ourselves before there were the capital markets for the gold space were even open.
Yeah.
In the early part of last year, summer started to be the time when we saw some capital markets activity in our space. But by March, April of last year, we've financed the project to build. Mm-hmm. And we did that with a plain vanilla bank facility and came up really with the equity piece that most banks require from our own insider pockets, at least for the most part. So we didn't have to rely on the street to finance it, but we also knew that we were limited in our capacity to build the first stage of the project. With the market being stronger, we raised a little bit of money to do some drilling, and I'll talk about that expansion scenario in a moment, but the base case economics are 35+% after tax for about a 90,000 ounce profile for about 8.5 years at a cash cost of about 690 Canadian or about 520 US, and very profitable at $1,000 an ounce cash cost margin. Right. At today's gold price.
Yeah, so the base case makes a lot of sense. I mean, that was one of the big attractions for me for the asset right off the bat. The base case mine is a good mine being built by a very competent team. But yes, the drilling has been really interesting of late. So you're exploring the other 2 deposits on your project, the ones that are not included in the mine plan so far. Yep. So take me through a little bit of what you're finding there and what you're going to do with that information.
Sure. Well, the other 2 deposits are called Cochrane Hill and 15 Mile Stream, and we always had them sort of almost in our back pocket. They were in inferred and indicated resource confidence levels. And in October last year, we launched what we call a delineation program, which will bring the confidence level from inferred up to measured is the objective, which will then allow us to incorporate those same ounces from those 2 deposits into our Moose River life of mine plan. Mm-hmm. And that has the potential to double annualized production and, of course, extend mine life. So that's what we're on target to do in June or the first week in July. We plan to issue a new resource statement as a result of the completion of those programs. And then in around September, about the time we commission our base case production, we should have a new life of mine plan out, which will demonstrate that upside in production on an annual basis, as well as a longer life mine plan.
Which is pretty amazing. I mean, stepwise mine development has always been around, but often that's sort of a very small scale starter operation, to try and get to something bigger. But what we're talking about here is a robust mine off the bat, and then as soon as it's getting going, putting out the plan that's set to double that production and make it considerably better down the road. So
that is the plan. And on top of that, we've got some regional drilling that we're going to do in the next couple of months. We've got 14 targets, in fact, that have really never been drilled in modern times. Some of them have been the result of workings in the 1800s, so that's always a good sign that someone else has mined gold there.
Right.
So we plan to drill those and continue on demonstrating what we call our string of pearls strategy, which is about 80 kilometers of strike length of this big structure in the Maguma terrain, which we think hosts this style of mineralization. And we're focusing on the disseminated and the old quartz veins with nice bulked out widths near surface to create low strip open pits. And our plan is to be there with the success of that exploration for 15 or 20 years.
Right. Yeah, I mean, big part of the story, these are lower risk assets to mine, deposits to mine, because like you say, near surface, low strip, open pit opportunities. And it's also, just to finish, I think it's worth mentioning, you said that you funded the equity portion of the capital requirement mostly internally.
Yep.
And that means that insiders, management, and the board have a very significant stake in Atlantic Gold.
We do. We put our money where our mouths are, and we own about 35% of the company. And kind of as a result, too, we're very focused on that risk management side. So we have a vested interest. We've got strong alignment with shareholders, and we continue to work at growing the company. Yeah. No, I mean, I think it's great to see that alignment, and this is a trajectory forward that's got a lot of activity and a lot of upside in the near term. So thanks very much for coming to the show today. Thank you, Gwen.